Let's move on. Again, we'll see one illustration. Example, Mr. X purchased the running business of Mr. Y on 1st April 2015, and the business was incorporated on first we'll take 1st August 2015. Okay, so okay, the sales from 1st April to will take 30th September 2015 was even, that is equal, and the sales for the remaining months were thrice of the normal sales, but the sales of February and March is 4 times the normal sales. Okay, so firstly what we need to find in this question, firstly we need to find the time ratio. How we'll find out the time ratio? We'll find out the time ratio in this manner. Please write time ratio in full form and underline it, and write pre-incorporation period, incorporation period ratio, post incorporation period, post incorporation period, and write the dates. When up to what date it is pre incorporation? 1st April, that is 1/4/2015 to 31/7/2015, and from 1/8/2015 to 31/3/2015, that is 4:8. From 1/4, that is entire April, May, June, and entire July. So 4 months. So 4 months is the pre-incorporation period, and 8 months is the post-incorporation period. So that means therefore time ratio is equal to 1:2. Okay, 1:2. Okay. Now we'll find out sales ratio. Let the sales be 1. Okay, we'll not take X. Okay, we'll take 1 because this is the working note. This is a part of working note. The statement will be the main answer. So working note can be as per your assumption. You can take it either X, you can take it 1. It is on you. It depends on you. So let the sales be rupees 1. Rupees 1. So sales from 1st April to 30th/9/2015 was even. That means so we'll write in this manner. We'll directly write like this: April, May, June, July, August. I was knowing it was not visible. June, July, August, September, October, November, December, January, February, March. So from 1st April to 30th/9, that means till September, the entire month of September, the sales are even. That means 1 1 1 1 1 1. Okay, so it is rupees 1 1 1 1 1. From okay, what is it then? Equal, and the sales for the remaining months were thrice of the normal sales. Okay, remaining month was thrice of the sales, but the sales of February and March is 4 times the normal sales. So firstly we'll write the sales of February and March. February and March, what is February and March? Normal sales is 1 and 4 times. so which is equal to rupees 4, rupees 4. Okay, and the sales for the remaining months are thrice of the normal sales. That means 1 into 3, 1 into 3, 1 into 3, 1 into 3, which is equal to 3, 3, 3, 3, 3. Okay, which is equal to 3, 3. Now, as per the time ratio, what is the time ratio? The time ratio is from April to July, it is pre-period, and the remaining months is the post period. So we'll calculate for the pre period, it is 4, 4 is to, for the, this is pre is to post. Okay, it is 4, and for the post period we'll calculate 1, 2, and this will become 12. 3 4s are 12, 12 plus 2 14, 14 plus 8 will become 22. So this is 22. Okay, so 1 is to 2 is to 11. 2 is to 11 is the final ratio of sales ratio, and time ratio is 1 is to 2. I hope now sales ratio and time ratio have got synced in your brains. Hope this is quite clear to you all. If you want, you can please copy this. Please pause the video and copy this much. Please pause the video and copy this much. I hope you all have copied this much. So now we have completed with time ratio and we have completed with the sales ratio. So without time ratio and without sales ratio, there are certain other expenses which are to be covered. So what are the expenses? We'll see. We'll see post expenses. In post expenses, what all things are covered? In post expenses, I'll write expenses which are related to the company will be transferred to post expenses. What does this mean? In the question, it might be given in a clear manner that after incorporation, preliminary expenses have been paid. So preliminary expenses are paid for the purpose of incorporation of the company. So it is related to the company incorporation expenses. So such preliminary expenses will be directly transferred to the post column. It won't be divided in the ratio. It will be directly transferred to the post period. Or say example, I'll write, I have given example, preliminary expenses, then director fees, managing director fees, company secretary's salary. In the question they might give it in a clear manner, after incorporation such expenses have been incurred, so it will directly go into the post expenses, that is post incorporation column. And what does pre expenses means? Expenses like only the expenses have been incurred for the like accountant salary up to the date of incorporation. So it will simply go into the pre expenses, that means pre incorporation column. I hope this is quite simple. You will understand it automatically as and when we'll be solving the sums. One more last thing I want to teach is interest on vendor. Interest on vendor capital will be going in pre-period only. Okay, and interest on purchase consideration will be going in time ratio. It won't be going in directly pre or post, it will be going in the time ratio. So this was an important thing which I couldn't implicate in this, so that's why I have given it over here. So please remember, interest on purchase consideration will be bifurcated in the time ratio, and interest on vendor capital will be bifurcated in the pre period only. But for this interest on vendor, if it is given like this, interest on vendor up to the date is, say, take 31st August, but the date of purchase is, say, 1/4/2015, and date of incorporation is say 1/7/2015. So the entire interest on vendor capital will not be transferred in the pre period, it will be transferred in this manner. See, interest on vendor capital is up to which date? Up to 31 August. So it will be in this manner: 1/4/2015 will become pre period to 31, not 31, 30th 6/2015. This will become pre period, and post period will become 1/7/2015 to 31st August, that is 8/2015. So which means that 3:2. So the entire expenses, that is interest on vendor capital, will be bifurcated in this ratio 3:2. Okay, this is not time ratio, this is not sales ratio, it is direction ratio, direction given in the question. Okay, direction given in the question. This all is direction given in the question. If it is directly given that interest on vendor capital and no dates are given, so simply transfer it in the pre period. Okay, that is pre incorporation column. I hope this is quite clear to you all. So firstly, I want you all to please pause the video and copy this. Please copy the remaining part.